everybody out there in Facebook land. My name is Judah Hoover. I am a real estate investor and a realtor, finishing up strong. This guy right over here is Josh Weidman. I loved your Facebook ad that you posted today, Josh. That was absolutely. Didn't you just say before the show that you were going to turn off your phone?
I know. Listen, I'm looking for the Facebook, the ad that you're talking about.
Right.
What was the post?
You posted something. If you absolutely have to close your deal by the end of the year, give Josh and Hard Money Bankers a call. So that's who Josh is. Josh is a real estate investor, and Josh is also a real estate investor and a hard money lender. So both Josh and I make money directly from the real estate investing business and indirectly from the real estate industry as well. And this is a show for you, Build and Grow with Real Estate. If you are a realtor, if you are a lender, if you are a hard money lender, if you are a buy and hold guy, if you are a flipper, if you are an appraiser, if you are, like I said, directly service and make money from the real estate industry as an investor, or your job is making money from real estate, this is the show for you.
Yeah, if you got 2 ears and a mouth,
right.
I'm telling you. Right. No. So today we got Ian Horowitz on. Ian is a very seasoned real estate investor. Started out wholesaling properties as a fireman, right? And turned that into a really, really successful career. Right now, he is a developer. He and his partner, they just closed on a 80,000 square foot commercial building in Baltimore City.
Yep. Yeah, we just actually the closing should be going down here in the next, I don't know, at some point today. But yes, we are purchasing a large commercial redevelopment property. So
that's awesome. I got to just say something here to Taz. I apologize. I don't know what this means. No one's ever said that they have trouble hearing me before. That's never come up, especially when I'm face to face with people. So I will try to speak a little bit louder there for you, Taz.
Yeah. So we. Once a week, we try to have on somebody new, a new face to talk about real estate. And I always like to ask, and I always like to start by getting your background. Like, what the heck was it that you were like, yep, this is my moment. I'm going to go and get into real estate. And then let's just talk about your progress through your career.
I think it was being a firefighter wasn't quite stressful enough for him.
Yeah. That's definitely it. And Judah, I don't know you as well as Josh. Josh obviously knows my story, but your audience doesn't know. So let's get into it. 2002, 2007, 2008, both my business partner and I respectively got hired by Baltimore City Fire Department, right at the beginning of the end of the market. But we both took government jobs just for stability. Look, we love being firemen. It's the coolest job in the world. You see so much stuff, but when you're a little green guy, you're like, yeah, this would be great. And then, so 2008, 2009 kind of goes by, everything happens. We start getting furloughed. They start taking our pension. They're messing with our, they start messing with our health care. Well, it happened with everybody with Obamacare. Then you want to have kids and you're like, well, how the heck am I going to send my kids to, I got to pay another mortgage payment so my wife can go to work. Like, it just, things aren't making sense. You're watching pension systems all across the country go bankrupt. Typical firemen, we all have side jobs, work 2 days on. At this point, we're working 2 days on, or 4 days on, 4 days off. So two day works, 2 night works, 4 days off. We all have side jobs. I'm landscaping, doing 80 hours a week. It's absolutely insane. I said, there's got to be a better way. And I said to myself, how can I make money while I'm asleep at work? Like, that was my sole goal. If I'm laying in bed at 1 a.m. at work, how can I make money? And through a family connection, I heard about, real estate, subsidized rentals. I was like, this sounds like something for me. The universe must have heard my wish. I ran into this other guy. I go to this meeting. It was like a MLM sale type thing. And next, I'm in real estate. But my main motivation was securing, not because we don't pay Social Security. It was really about not paying. We don't have Social Security. We only have this pension. And it's like, I did not want to rely on this as solely as a retirement. This became a retirement project. And that's how I've grown from there. So,
it's kind of interesting that you say that. Like the pension programs that we have remaining in this country, they're like it's like the third rail. You talk about touching those pensions, but the reality of the financial situation of many of these like large state and local governments is that, there may be a time when, they come back to the table and it's like, listen, I know we told you we could do this, but we just can't. And we've already seen that happen with General Motors and some of the other stuff, the car companies.
Yeah, no, it happened to us. So 2012-ish, right around when I got into real estate. Don't quote me exactly what it is, but when this thing went down, they said, oh, you were supposed to get a benefit at 20 years. Yeah, that's just a joke. I know it's in our city charter. You guys can sue us in court. Good luck, but we're switching everybody to 25 years. Just literally overnight, they said, screw everyone. And then it's like, well, that's going on. And then you look at like, you're talking about private industry. Let's talk about Detroit and like all up and down the coast of California. Pension systems were going up overnight. Guys in Detroit that were firemen, who are retired, they're making $50,000 a year. They literally went to them and said, that's it. And you guys can Google the articles. They said $12,000 a year. That's all you're getting. So your income is like wiped out. And if you don't plan for this, like, then what, so.
Right.
Well, and it's especially bad for people who are firemen because, it's not, your knees are only so good for so long, with all due respect, my friend. But I see a little bit of gray in that beard of yours. And your back is only so right. Right. So, it's a profession that certainly has a shelf life to it.
Correct.
And 5 more years at the end, when you're already, a little past your prime, that's asking a lot of people. And I think that there's a lot of people that are in that boat who are saying to themselves, hey, I've got some money in stocks, bonds, and mutual funds, but how secure is Wall Street? We've seen huge downturns where, think about what happened in the spring. We saw the stock market take like a 25-30% dip. Now, fortunately, it's recovered, but that just kind of goes to show how flighty the market is. And fortunately, that's come back. And so I think that you're very wise in saying, I've got to do something for me. I've got to have something that I can control and do that. Now, you say you and your business partner, so you and him are both deciding, like, let's buy. You said, I know Section 8 down in the Baltimore area it's completely reversed from Central PA. In Central PA, people call houses and say, will you accept my Section 8 voucher? Down in Baltimore, it's you're trying to get people to come to you because they can go anywhere with that Section 8 voucher.
Right.
The economics is reversed.
A little bit, and I'll get into like how we wound up on this. Is again a family friend of my in-laws was doing it. I was like, oh, that's really, really interesting. And like I said, I landed on it. And what it is that, I knew I wanted to be in real estate, but it was also like, I had this fear of, will a market rate tenant pay me? What if I take on all this debt? There's no overtime available. There's all these different things. And I was like, I need to navigate this system. And it is true actually in Maryland and everywhere else across the country, because it is a nationally administered plan. The Housing Choice Voucher Program, formerly known as Section 8,
very political. Good job.
Yeah, that's my cleanest thing I'll say all day. I promise. Right. Everything else is downhill from here. But anyway, what it is that you get your house ready and you get it ready for rent, and you do exactly what you would do if you're going to go rent to a market rate tenant. The only difference is you're accepting a voucher and you have a little bit of red tape to get through. There's a little more market demand here in the city just because of the demand of what we have. Obviously in city, there's usually people that need more affordable housing. So we have a competitive advantage there than we do in most other markets. But that's one of the reasons we've had really good success with it. So.
Okay. So you start out in subsidized housing.
And mostly single families, right? Or small apartments.
Townhome type. Yeah.
You just told me you bought an 80,000 square foot place, and you were telling me earlier about a 74 unit building. And I'm sure those aren't your, only 2 large plays. So how did you go from Section 8 single family row homes in the city to some of the jewels that you have in your crown today? What does that transition look like?
Yeah, so we had a lot of success. So one of the traits and one of the backgrounds that my business partner and I both had as like a strength is that we come from construction. We understand construction very well. So doing this, and that's our value add proposition as we start doing these larger deals. And what happened is that in the city, there's a lot of inventory in stock. Google Baltimore vacant houses, and you'll see the pictures. But those aren't necessarily the neighborhoods we're working in. But in 2014, when we were getting involved, the market was doing nothing but trending up. So we could buy shells at a good cost. We could get good values on the back end, and we could go in and buy the stuff where you'd walk in the basement, look through you'd have the nice sunroof for the
whole
top.
Way up.
Yeah, and
sunroof.
That's what we wanted to do. We wanted to go in and buy stuff that was like infill type product, and we could fix it and build it the way we wanted to build it.
Let's time out though. Can I just say something here? Time out and respect the bricklaying masons that built that stuff back then. Yeah. Could you imagine like dropping an anvil through a modern house from top to ceiling and expecting the walls to stay there? Like, kudos to those little immigrants, hunched over, building those houses. Baltimore has a lot of them, Lancaster, York, Harrisburg, other markets that I have. And they are just, some of them are three bricks thick. They just don't make houses like that anymore.
Yeah, interesting. Actually, a little interesting fact, since we're doing some history, is that the interior walls that would separate the houses, the reason they're usually so crooked and messed up, it's not because they didn't care. It's usually where they let the journeyman go in and train, because nobody would ever see it because it would get plastered. So they would let the journeyman train on the inside, and that's why some of your bricks aren't as perfect on the inside as they are on the front and the rear and the sides of the houses. So
nice.
Interesting fact.
Josh and I talk about breadcrumbs. That's a little breadcrumb for today's. So my dad taught me how to paint.
Yeah.
And I was like 12 years old and learned how to paint in a closet.
Nice.
So
same thing. Same exact thing. But yeah, so we just having this position of being able to go in, first off, renovate the properties, and for subsidized houses or market rate tenants, to us it didn't matter. It was like, we always said, when we build this house, could we live here? Like, if we just got in the fire department, we had nowhere else to move, will we live here? Absolutely, yes. Okay, great. And we would keep it moving. And then we found a knack and somebody who was able to place subsidized tenants and market rate tenants at a really quick rate. We had the bank financing in place, and we rocked and we rolled. And then just by doing deals and by taking action, and as we grew our portfolio, people start to sniff around and say, who are you? What do you got going on? I noticed you got all these properties. How'd you do it? And we just kind of kept creeping our way up. And this, we bought a 7-unit, we bought a few 2-unit houses and row home types. Then we bought a 7-unit building. Then we just recently bought a 34-unit building. And then we bought a 76-unit building. And now we're buying this big commercial redevelopment. And it's really just, if you don't ever take that first step, you can never walk, right? And I know Josh is really good at setting goals and stuff like that, but it's like, we just broke it down and said, okay, if we do this, and this, we're eventually going to get to the finish line. And just by taking action and doing deals, we've put ourselves in this position to continue to grow, have the team, have the resources. And I don't think a lot, we can get into that real deep, but as you get into some of these larger projects, you can partner with other people that are finance guys, and we bring the value proposition. They bring the value proposition of finance and private equity. We bring the value proposition of, we can fix this stuff and manage it because we're in house here, and you can just keep knocking it down. One little, can't eat your food unless you take a bite, right? So,
right. So you keep on alluding to this business partner of yours. You guys met through the fire department, or you guys knew each other?
No, we actually grew up outside of Philadelphia together. I've known his wife since I was about this
right.
big,
right.
And we both volunteered up there, and a few of us wound up down here together. And actually, we took different paths into real estate. I started in rental properties. He started in wholesaling. He's like, you're doing real estate. I'm doing real estate. I want to flip this house. You've never flipped a house. I got it under contract. You got resources. Let's do it together. And that was deal number one, man. And, we tried deal number one, and then we did deal number two about 6 months later, and we're like, oh my God, this is amazing. And then we just hit the ground running. And it was 2014 we started. I'd say the winter of 2014 into 15, hit the ground running, and off we went, so.
Was there ever a moment when you were like, geez, we screwed up, I'm going to lose my house, we're going bankrupt, I shouldn't have done this, how do I get out of this, and whatever? Was there ever a moment, because you were invested in some pretty rocky years there, 14, 15, and 16 were not always rosy years. How do you push through, and what were some of those decisions like?
So luckily for us here, we had always appreciating market here. We always had the out to rent the properties, because I did have the background of running rental properties. At that point, I had 10 rental properties of my own. So it was just, I'm a little more risk adverse than Dan is. That's usually why two partnerships, that's why a partnership usually works out, because one's one type versus the other. And I'm sure there was days, like I remember trying to reconcile books, the pressure of the tax bills from flipping houses and all that other good crap. And, you just try to keep your eye on the prize and like what you're trying to work towards and where you're trying to get. And, there was plenty of times where I was probably like, F this, you don't see your family for weeks, especially when you're in growth mode. We didn't have a project manager. We would go down to the city. We have a beltway, which, laps the city in a big circle. It's a highway. We would lap the beltway, once or twice a day, going to all of our different projects. And then we would both go home, eat dinner, probably barely say hi to our wives, and then go and reconcile all the books and look for new properties and where are we going next? Who's raising capital? You know what I mean? Like, there was just a lot of stuff, but I think if, the one thing that always motivated me is that it was like, well, we did it once, why can't we do it again? And the other thing was I could go sit in the firehouse for 24 hours and work overtime and get paid this small amount and get taxed on it, or I can buy one property, deal with all the BS, but always get that callback money on time every month. You know what I mean? So for me, it was like, I'm making a major sacrifice today, and tomorrow it should pay off. And slowly but surely, after 6 years, we're starting to see some of the fruits of our labor. It's taken a long time, but it is worth all the headache, all the drama to get to where we are today.
Yeah, I've been doing this for 20 years, and I got to tell you, man, I do not see a lot of people who have built what you've built in just 6 to 7 years. That is very impressive. Kudos to you. A couple of things that I just want to call out that I'm hearing, with all due respect, there's a lot of people who are doing larger deals right now in the nation, and there usually are a charismatic individual, or some type of a salesman, motivational speaker, who's out there raising money. You definitely have a blue collar feel to you. And I think that that's very encouraging, that if you can do this, anybody can do this. You don't have to have a Harvard MBA or anything like that to raise money and put together large syndication deals. You can do it from just a blue collar worker, construction worker, fire worker, landscaper background.
Ian actually started off at Harvard Law. He was like, you know what? I'm going back to my roots. And,
right. I just think the other thing that is interesting is, I'm not that far away from Baltimore, about an hour and a half away, and Baltimore was doing riots before it was cool. In 2018 and 2019, Baltimore was saying, "Hey, cities, we'll show you how to do this." And what's funny is, you say that you've always been in an appreciating market. You say that you've always been in a market where there was able to find good deals and create things. Whereas from the outside perspective looking in, you would say, geez, Baltimore's a toxic market. I don't want to buy there. Baltimore's a bad market. I don't want to do business there. And I think that applies to a whole lot of things, right? There's all kinds of things that the world would tell us don't invest in real estate. The world would tell us, you can't do it like this or you can't do it like that. But when you're up close and personal and you know your market and you know your numbers and you know how to put together a deal, it's a whole lot safer than what it would seem to other people.
Right. And I think, okay, so like sorry, Josh, I'm going to take you back to your Philadelphia days. Like me and Josh would always compare stories of like, well, this is what I'm doing in Baltimore. And like Philadelphia was on like a crazy upward trend. And I'm like, dude, there's no way I could ever work there. You're insane. And he would say the same thing to me. He's like, how do you do that? And something that me and Dan talk about a lot. And yes, Pete made a comment about what we have going on in West Virginia, but that's only an hour away. And so is Lancaster. But it was really fearful for us to go outside of our market. We have a major competitive advantage by operating in your own market. And unless you're in New York City or Southern California, I think most marketplaces, you could probably find some sort of decent return and find it. And here's the other, this is how I view it, is that, sure, you guys look at Baltimore and all you think is ghetto, right? And I'm not saying anything bad about this city. But when you look at Baltimore, like you said, it was cool to do riots before it was cool because everyone's like, what's going on in your city? Are they going to burn it down? I was like, no, we already did that. Like, that's old news. Like, we've been there, done that. But it's like, we don't invest in those areas where those things are going on. When you look at Baltimore metropolitan statistical area, your MSA, overall, it's really good. We're a satellite city to DC. We're not far from Philadelphia. We are close to Lancaster, the 83 corridor, distribution, the Port of Baltimore. We have all these advantages. If you don't take that time to research that, there's no way you would do it. I grew up outside of Philadelphia. There's no way I can invest where Josh and what he knew intimately about Philadelphia, as much as we would have loved to go back. And yeah, Lancaster County is only an hour from us, but I don't know that. I'm sorry, I think you're in Lancaster.
Yeah, I'm in Lancaster.
I don't know that I could go up there because I'm sorry, no offense, but all I think about is Amish people. I'm like, right. I got shanties out there, but I'm sure York City.
Yeah, there's nothing but Amish people here. Right. Don't invest here. Don't.
Yeah, right. Just you're holding the secrets back. See? So.
No kidding, though. It's amazing, especially in a metro area. There is such a huge difference that a couple blocks can make on, evaluating a property, the type of neighborhood, the trends that are happening in that area, that, if you're not in that market intimately, like every single day. I mean, I can tell you, stepping out of Philadelphia for the last year, and being more rooted here in Central PA, I've gone back and looked at some comps on some properties that, potential loans, potential investments out there. And it's like looking at a different world. I mean, like 1 year, it's a totally different game. And especially in cities where you have, small geographic areas that overnight get hot, and all of a sudden it's not even the same place anymore a year later.
Right. But Josh, let's push back a little bit. Being able to work inside of a city, I think there's a competitive advantage long term because you really have to be on your game when you're comping properties, understanding market data. No offense, out there in Central PA, you guys can maybe get away with a little bit more. It's a little more forgiving on some things.
Oh yeah, there's a lot of cities that are very block by block. And it's what I laugh about in Harrisburg. There's famously Division Street in Harrisburg, and it is a division between two neighborhoods. Like you would sit and look at those houses right there and those houses right there, and just your mind is boggled how that's different just one street can be.
What is interesting too, though, about pulling comps in the city or in densely populated areas, you definitely know where you stand. And, if you look close enough to the property, you know what's happening. You go outside of the city, like even some of the more rural suburbs. I mean, dude, it's like, oh, there's 5 sales on a mile,
I just listed a house right now in my stomping grounds in Southern Lancaster County. I put on my realtor hat and I listed this house for a good friend. And I was back and forth between it's like a $250,000 house. And I was back and forth like almost 30, 40 grand on where am I going to list this because of lack of comps. Yeah. Now, fortunately, I think I hit it right. And I put it on the market last night at 6:00 and I already have 3 or 4 showings scheduled. So, but it can be difficult. Hey, I want to address something here. So Ryan and Pete are both asking, where's Dan or Daniel? I'm guessing he's your business partner. You got some friends tuning in. So tell us about him here today.
Yeah, so I'll send Dan a text. We were just making fun of him today, saying, "Hey man, we got to do a presser for this our broker's doing a press release for this property that we're supposed to be buying today. And I said, Dan, you're up. He's like, you got it. You just handle it. But no, dude, Dan's so Ryan's our project manager, and Pete is someone who we've coached and mentored, and we actually wound up getting involved in a deal together. He's the one that brought us the West Virginia deal. So they intimately know Dan. But with that being said, Dan is, I'm way more visionary, like more of the space. I'm an I personality type, and Dan is way more down. Like, we got to pay our bills today. We got to pay our bills. We got to do this, this, and this. I'm like, but I need somebody like that. But Dan also needs somebody like me to be like, hey man, we should buy this deal, or like, let's nudge it along, or how do we get deal structure set up? And that's why we work so well together. And even though this beautiful face is the one that's the face of the company, it really is. It's a team. Like, I'll be sure to be honest with you. If I was the one left to like handle all the bills and everything, I can only imagine what kind of collection notices. It's just not my. It's not my.
So your strong suit.
Yeah. No,
I'm right there with you, man. I am right there with you.
Yes, Tucker hit it on the head. There you go, Tucker.
Right. All right. So that's cool. So I like the lesson here. Hopefully you can all be reading between the lines, dear listeners. And by the way, follow us, like our Facebook page. We do good memes, we do articles, and we do 3 shows a week. So definitely, go to Build and Grow with Real Estate and like us there. But I think there's a lesson here. I've seen, because I coach a lot of people, oftentimes for free in real estate, and I see people, they get a hold of a deal and they want to do it all themselves, even though they have no business trying to take that deal down themselves. And I love that Ryan was like, hey, I've got a tiger by a tail. Will you guys help me take this down and maybe take a smaller piece than what I would get if I tried to go out there and do it myself? But a percentage of something is better than a whole thing of nothing. And it was good for you. It was good for him. And plus now there's this relationship that's formed, and, you kind of become part of his credibility and things like that allows him to do bigger things. That's what I love about real estate investing. Is I was teasing before when I said, don't come to Lancaster. Dude, I want you to come to Lancaster, just like you want me to come to Baltimore, because this is the only industry I know of where direct competition sees competition as a way of helping and collaborating. And I have always loved that about real estate investing.
Yeah, 100%. And so Pete's the one that brought us the deal. And he's like, and we said to Pete, dude, just go do it yourself. You can handle this. You have all the wherewithal. He's like, I just don't have time. You guys can handle all this stuff. I just don't have, And I was like, okay, well, let's figure this out. Let's make it worth everyone's time. And we got it done. And if you check out our Facebook page or our Real Estate Reserve podcast, so I do with the other hard money banker guys, we've done some case studies on that property and how it worked and how we were able to break it up. But with that being said, is like, I don't know that we could do any of these deals without doing the single family deals. And I was just telling Jason the other day, I was like, we should do a debate with we probably have to bring gurus in to do it, but could someone really get out and do a multifamily deal, a large multifamily deal on day one without doing something inside of real estate beforehand, like a single family property?
They say they can, and there's 300 million people in the U.S., and the guys who sell syndication courses say that your first deal can be a 300,000 or 300 unit deal. I've never seen it. I've seen the case studies that show that it's possible, but in a big enough country, you can always find that 1 or 2 guys who's actually done it. Right. But I don't believe that you can credibly say you can do that.
It's like trying to manage a construction project,
right,
without knowing like how a switch works,
right?
Or like how to flush a toilet, like
right.
That's how. Yeah, I can't imagine.
So what's the name? You mentioned your Facebook page. What's the name of your company? Is it DGI Development?
Oh yeah. So our construction company is DNI Development, but everything's under Equity Warehouse.
Equity Warehouse.
We're all over the place. Well, I guess sometimes we're all over the place, but we got a Facebook page and a YouTube channel, and you can find us. So
yeah. Check them out, equitywarehouse.com and Equity Warehouse on Facebook. Yeah, Ian, man, I love hearing about this stuff. And I mean, dude, I've been checking in on the Real Estate Reserve, and and watching some of your past shows and some of the other stuff the last couple of days, there is a lot of gold in there. It's really good stuff. Great job.
And the way me and Jason would call each other every day. And I was like, dude, instead of like, I know we talk every day, but like, why don't this content's so good? We need to get it out to other people. And it's the same thing you guys are doing. We just bring in people that we want to talk to, that we like, and we talk about topics that we like. And that's how the whole thing got. Just how the whole thing got started, and we're glad to be doing it. So
yeah, that's exactly how Josh and I got started. Is back in the beginning of all the shutdown and everything like that. I run a real estate investors club and have for about 15 years. I've started a couple and helped other people get some started, and it's been a great way for me to network and make money from and with the real estate investing community. And Josh had me on once or twice as a guest to this show, and because we couldn't get together, it was a way for me to feed my troops the knowledge and content that they are looking for. And from then we build and grow with real estate as a brand, and we're growing that brand to be because here's the thing. I think that there's a lot of good podcasts out there for realtors or lenders, loan officers and stuff like that, and a lot of good content for real estate investors, but there's nobody who speaks to that guy who probably is both and all of those things. And I think that a lot of people work in the real estate investing community and service the real estate investing community in some way, shape, or fashion or form. So that's kind of what we're all about. But listen, man, we've got to have you on again. And I would love to. I know a bunch of people down in the Baltimore area. My good buddy Craig Fuhrer, who I'm sure you know, and he's spoken at my club and been there on a number of occasions. And you probably know. Do you know Michael Novak? Josh, I'm sorry. He's another hard money lender. Novak Financial. He's a good buddy of mine that I've known for a while. And I know a bunch of we got to swap some names because I bet there's a bunch of people down in Baltimore that we both know.
Yeah, man, definitely. I'd love to come back on and definitely talk about if you guys really want to dive into subsidized rentals. We wrote a book on it because we had such great success with it. You guys can check it out, landlordinglife.com. Yeah. We'll give the book away for free. Just pay for shipping and handling. But it's not just a book about subsidized rentals. It's a book about how you should set your rental properties up. Things you should look out for, because whether you're doing it for a market tenant or a subsidized tenant, you should be doing it in your property anyway. So guys, thanks for having me on. I don't know if you guys are going to keep talking, but appreciate the time. Happy to come back on and talk case studies or books or whatever you want to do. I'm here, man. Love you guys.
Let's do it. Awesome. Thanks, Ian.
See ya.
See ya. All right, guys.